Good morning, TipRanks community. It is an honor to be with you for yet another webinar. Happy Wednesday. For those of you who are joining us for your very first webinar, my name is Ari Gutman. I am a TipRanks Customer Success Manager. Now, webinar to webinar, I always like to share with our community members that I find my job to be incredibly easy, and that is because it is just being here for all of you, our investor community. And then, of course, here at TipRanks, doing everything I can to essentially communicate what I'm hearing, the boots on the ground from all of you to my team, so we can go ahead and better perfect the tools that we have here at TipRanks. And then, of course, be delivering new tools along the way. Now, if you are joining us for your very first webinar, the first thing that I want to share with you is essentially what we do webinar to webinar. And I essentially start off with our economic backdrop. We go over a bit of what's happening economically so we can all be on the same page. But most importantly is first painting that economic backdrop for ourselves as investors, so then we can go ahead and pick out which TipRanks tools are actually going to be best for us at a specific time, or perhaps what tools may lead us to different sectors or different stocks altogether that ultimately will be beneficial for us as investors. Now, in today's webinar, I'm actually going to talk about 4 different features and tools here on TipRanks. The first of which is going to be the insider top stocks. The next is website traffic. And then we have top research firms, as well as the risk analysis tools. Now, if any of you out there have not heard of these tools are actually tools and features for our ultimate users. And I'm telling you all up front that these are the tools that I personally believe that when I'm looking at our toolkit, if you will, that are necessary as we move well into 2023. Now, why do I say that? And I'll wrap now into really our economic backdrop as well. But before I even get there, I want to share with you something that I actually shared with our community members who are premium and ultimate users on Monday, and that is that economics is pretty boring. Now, I share that because week to week, we're all able to jump on the webinar together. I'm even able to jump on to these one-on-one sessions with our community members. We do talk about economics in the stock market. We talk about TipRanks tools. But week to week, when we take a look at really macros, which I always say macros do matter when it comes to investing, at least for all of us to know on that macro level, not a whole lot typically changes. And so time has to do its thing, which is go by. And I want to go back to about 2 weeks, a jobs report that came in, which was supposed to be an expected jobs report of 187,000 jobs added to the U.S. economy. Now, 2 weeks ago, we had that report come in, and we had over 500,000 jobs added to the U.S. economy, 517,000 to be specific. And what does that essentially mean? It means that we have an incredibly strong labor market. Now, when it comes to taking a look at how robust our labor market is, we have to take a look then at where unemployment is at this point in time. Now, our current unemployment level is actually at 3.4%. That is essentially an historic low. We haven't seen this low of unemployment since 1969. Now, the expectation actually, as of 2 weeks ago, was that unemployment was going to go up to 3.6%. What the Federal Reserve has been actively trying to do is essentially raise unemployment. And so we were expecting 187,000 jobs, and we got over 500,000. Then we were expecting to have unemployment go up, and it went down. And so what can we expect just from that data is that the Federal Reserve is going to continue to move in the direction that they've been moving in, which is fighting inflation, fighting chess move by chess move, if you will, to get inflation down to this goal of theirs that is 2% inflation. Now, that is going to take some time. And I actually want to go back to now about a week ago where we had Jerome Powell, who is the Federal Reserve Chairman, come out at the Economic Club in Washington and share 3 times to be specific, that the Federal Reserve is essentially expecting a bumpier road ahead. And we're going to be living in this environment, essentially, which economists and investors across the board expect to be living in this environment of higher interest rates, as well as higher inflation for the remainder here of 2023. So what does all of this mean essentially for all of us it means that we should certainly be cautious in how we're investing. And depending on what the macros look like for ourselves as investors, taking a look at what the next 6 months to 1 year plus could look like. Now, I always like to share that I can't predict the future. I don't know anybody who accurately can predict the future, but I always say that it is best to be prepared for the absolute worst while still planning for the best. So this all leads me to our TipRanks tools at this point, because it's an understanding trends and understanding what the insiders at these companies are doing, what they foresee at their fingertips, the data that they have in front of them that can better help us paint our picture for the next 6 months to 12 months plus. And just based on all of this economic data that we have, we can expect that the Federal Reserve will continue to increase interest rates as we go. And from where I sit and how I see it, I like to think that in the next 6 months to a year out, we will get higher interest rates. What that essentially will do is sector by sector increase unemployment. Now, right now, the tech sector has been hit pretty hard for the last 6 months to a year. And I think we need to see more unemployment sector by sector. Point we will see the Federal Reserve maybe pause, but we even had Jamie Dimon, CEO of JP Morgan Chase, come out just the other day and share with us that he foresees that Fed terminal rate actually jumping up above 5%. So just imagine that, guys, an environment that we're going to be living in for the remainder of the year, higher interest rates, higher inflation, companies trying their best to circumnavigate it all. And what does that really mean that they're going to be doing? How does the consumer react to it all? These are all the questions that we have to ask ourselves as investors. And now jumping into our TipRanks tools, because again, it's all about painting this picture and trying to do the best that we can as investors to see where we may be in the next 6 months, where we may be within the next year plus. And I want to go ahead and share my screen with you all and lead us to our first TipRanks tool. Bear with me for 1 second as I get to sharing the screen. So we are here on the homepage of TipRanks. The very first tool I want to go over with all of you is the Insider Top Stocks. And so what we're going to do is actually hover over the research tools. We're going to go to Top Stocks, and we're going to come down to Top Insider Stocks. Give that a click. And here we are. For those of you who are brand new to TipRanks, or perhaps a beginner investor, not too sure of what an insider is in correlation to hot stocks or stocks in general, an insider is just somebody that has either a stake in the company or perhaps an executive at a company. And so what I always like to share with everybody is that insiders typically have the information that I'd really like to know as an investor at their fingertips. So if you're an executive of a company, you most likely have information on your desk that the general public doesn't. If you're a 10% stakeholder, if you're a 20% stakeholder, if you're a stakeholder of a company whatsoever, you most likely have some information at your fingertips that the public, myself, does not. So I want to get to investing as close as possible to my insiders. And here's the exact tool that's going to allow me to get closer to the insiders and understanding what they're doing and how they're trading. They're buying into the company, their own company, if they're selling out of their own company, what exactly are they doing? So here we are, let's get started. We can see that we do have a couple of different strategies here for insider trading. And I want to go over just the 4 that we have at the top. So we have transaction strategy. That is when the insiders of a company are generally making those trades in or out of their company. We can jump over to C-level strategy, where we're going to get now our officers of a company selling in or out of their own shares of the company. Head over one more to major event strategy, where we have essentially institutions, big institutions, hedge funds that are making movements, selling in or out of a position. And then we have here our top rank strategy, which is essentially just the best of the best who were either trading in or out of the company. Now, what I like to do, not only just using TipRanks, but whenever I'm actually analyzing data, is benchmark whatever data I'm looking at. When it comes to a stock, it's going to filter out to different now performance results. So right across the board, I'm going to show you that one more time. No benchmark. We look like we have some pretty good numbers here in terms of performance and returns. But when I hit S&P 500 to benchmark it to the S&P, voila, here we are now with a brand new set if you will, to take a look at. And I can see that major event strategy is, when it comes to performance and the results here, driving about 7.86%. And then I have one over top rank strategy, 6.58%. I always like to say, to invest with the best, you want to make sure you're utilizing the best strategies. Here we are. Major event strategy seems to be the top performing strategy that we can run with. We're going to scroll down. Now, usually all these are actually checked off, and we have this running list of essentially stock ideas, what I call stock ideas. And I call them stock ideas because every day when I check this list, it allows me to generate stock ideas and take some of these stocks and put them onto my stock watch list. And this is really where the due diligence will now ultimately begin. But because I want to invest with the best, I'm actually going to uncheck transaction strategy, uncheck C-level strategy, and I want to uncheck top rank strategy, because as we can see up here, major event strategy seems to be the winning strategy. On average, the stock market's essentially returning about 7% or so. So we can see that this is either running here with the market, or can come up and outbeat the market, outpace the market with this specific strategy. So here we are, we can scroll down, and now we have this list that has been filtered out of the strategies that we do not want to use. And our list now is of stock ideas. And that's all we have to do as investors, is go ahead and click on any one of these tickers. And we will just click on, for the fun of it, Purple Innovation here. We'll head over to their page, stock analysis. We see that it looks like they're down nearly 30% on the year. This is actually, for me, not necessarily a terrible look for stock analysis, because when I jump into a stock analysis, I actually want to see red. And I want to see red because I don't necessarily want to be buying at the peaks. I don't want to be buying at the top. I want to be buying when a stock is actually experiencing the turbulence of our economic conditions. And so here we are. This is now where my due diligence will begin, because this stock is not performing at its peak at this current time. But we can see that we have some pretty strong indications to our right-hand side. TipRanks smart score of a 7. Now, an 8, 9, or a 10 actually means that this stock may be outperforming the market, likely to do so. We can go down. We have bullish blogger sentiment, increased hedge fund activity, neutral news. But again, this is where my due diligence is going to begin. Just because this stock, Purple Innovation, was on that hot stock list, it does not mean it is a buy. These are just our stock ideas here that we have to then do more due diligence on if we are going to be intelligent investors. Now, I actually want to jump over to a specific stock page for this next tool. And just for the sake of our webinar today, I'm going to use Amazon. I'm going to head over to their stock analysis. You can see that Amazon here, very similar to Purple Innovation, is down on the year. It looks like Amazon about 36% over the last 12 months. Amazon also has that TipRanks smart score of a 7. We can take a look at some indications over here. Bullish blogger sentiment. There's been a decrease in hedge fund activity for Amazon. Positive crowd wisdom, which means that we have a lot of users on TipRanks who are actually adding Amazon to their portfolios. And then we have the news segment here. But again, I see a stock that is down on the year. I see a stock here in the stock analysis page that is in red. And my green flag goes up as an investor, because I do not necessarily want to be buying stocks at their peak. I want to grab them when they're low, but I want to make sure that I'm doing my due diligence. Now, one of the tools that I want to dive into now is website traffic. Now, website traffic, for those of you brand new to TipRanks and not familiar with website traffic, is a tool that essentially tells us the amount of activity that a website is seeing, how many people are going to Amazon.com. And this is exactly what website traffic is going to allow us to do, is understand the website traffic. So the volume, how many people are going to Amazon.com. Now, what does that do for me as an investor? Well, it essentially allows me, again, to start painting trends. Now, I know that when I go to Amazon, I am typically shopping for a product, or I have an idea in mind, something that I'd like to purchase. Ultimately, as an investor, I'd like for everybody who goes to Amazon.com to actually make a purchase, because that will translate eventually into revenue for Amazon and look quite well on their earnings reports, aka that stock will then go up. However, in seeing a chart like this, we can see that Amazon has essentially a lot of website traffic over the past few months here. Now, we can also understand that what's been going on economically has certainly impacted consumers. Depending on when those impacts have happened on consumerism, we could see that Amazon has had decreases in website traffic, and then they've had momentum coming up on the end of the year. We can see a lot of shopping takes place, holiday season. It is all reflected here in our trends. But what I'm really looking for, if I'm an investor here, is right now, if Amazon is down on the year, which we saw it was just over 30%, but I can see that they have a very nice trend here in terms of their website traffic. People who are likely also shopping for something to buy on Amazon, hopefully proceeding to check out and transact with Amazon, that ultimately will be reflective then in their earnings reports. And at the end of the day, be great for me as an investor. So I can take a look, do a little bit of a deeper dive down here, year to date comparison, total unique visitors up 13.17% from the same time period last year. So my big question now, just based on some trends that I can paint with website traffic, again, this is not the only tool that you should be basing your investment decisions on, but this is certainly a tool that I can say, if Amazon is experiencing a lot more traffic, and I'm not yet invested in Amazon, or perhaps I have Amazon within my portfolio, but I'm asking myself, is it a time right now to then buy more shares worth of Amazon when it looks like they've been leveled out throughout the course of the last 12 months? That is the question that's out there once we start to paint our trends. Now, I also want to take you guys over to research tools again and head over to top online growth stocks, because here now we're going to get our list of the stocks that we can take a look into that have website traffic, and we can sort through this list by top trending website to websites that are actually losing traffic. So if I have positions in my portfolio and I want to take a look at some of them, can scroll down this list to see if I have any of these stocks within my portfolio. It's not a great sign to see that those sites are actually losing traffic. So I could do this by stock or by the domain, so the actual website itself. Head back over to top trending by domain. And here we are. Again, a great list for me if I'm not invested in these stocks, to actually take a look into the companies and ask myself that question: if these companies are experiencing an uptick in website traffic, could this be an opportunity for me as an investor? And the reason I am always asking myself that question is because when I looked at Netflix 3 quarters ago, 2 quarters ago, and last quarter, it is our website traffic tool that allowed me to essentially accurately predict how Netflix was going to be reporting earnings, which has been pretty amazing. Now, it is important to understand that when I'm taking a look at website traffic, because Netflix has been hit pretty hard throughout the year. I believe it was 2 quarters ago that they reported they had an uptick in subscribers to Netflix. Now, a very interesting metric for myself when I was taking a deeper dive into Netflix and going over their earnings report was the fact that they reported the uptick. However, they also shared that many of those new subscribers were coming from outside the United States, which was interesting, because then the next question that came to mind for me as an investor is, could Disney or say Apple catch up to their streaming service and then essentially in the longer term future outperform Netflix here in terms of that subscriber base? That's a question I pose for myself, but just in looking at their website traffic, I know that the only reason I go to Netflix is to actually stream a movie or a series. And so when I see this massive uptick in traffic to Netflix, I can only safely assume here that people are also going to Netflix to buy a Netflix subscription if they don't already have one, or perhaps just continue on with their Netflix subscription and continue to watch those movies and stream those movies or series with Netflix. So this is a very beautiful line that I'd like to see when it comes to Netflix. Now I can always go ahead and hit stock price here and see that there's a nice correlation that when Netflix experienced that decrease in website traffic, it's that stock share price that actually followed suit. And then it started to rise once again. Now we see a huge spike coming up where my cursor is here. and that stock price is following suit. But the question again comes to mind, is Netflix going to be that long-term investment for myself as an investor? It is all about painting the trends and being ahead of the game as an investor. Now, I want to go over to experts for our next tool and scroll down here to where it says top research firms and give that a click. And now here we are with the top performing research firms. What I always say as an investor is I, as an investor, want to invest with the best. Now, I don't know if anybody else out there has a favorite research firm when it comes to their stock market insights. However, if you are one of those investors who has a favorite research firm, perhaps you want to pop onto TipRanks and take a look at how that research firm is stacked up against other research firms and where exactly are you getting your information, because it's in knowing who to trust that ultimately is going to fare you far better than if you are just utilizing any old research firm. Regardless of who they are, you can go here to the top performing research firms. You can take a look the number of analysts they have. You can take a look the number of recommendations their firms have been giving. Most importantly, however, is the success rating. How successful is that research firm that you are actually getting your stock information from? Now, I'm going to use for our last tool, one of my favorite companies. It is Apple. I'm going to head over to our stock analysis page. And again, we see a company that is in the red. So for me as an investor, I absolutely love to see the red, at least in the short term, because I know I am a longer term investor. So in taking a look at Apple, I'm asking myself some deeper questions here, just as I would any other stock. What's been going on economically that perhaps Apple has felt the pinch with? How's Apple been performing against the economic environment that we've been living in? Why is this stock leveled out pretty hard here in the red, down about nearly 11%. We got 10.8%. Now I can look at some indications here on our right-hand side. A 9 smart score. Again, 8, 9, or a 10 is the likelihood here that it's going to outperform the market. Looks like analysts have it as a strong buy. There's bullish blogger sentiment. We do have some insiders who are selling out of the position. Hedge funds that have decreased in the position. However, we have investors across TipRanks. Our crowd wisdom here, very positive, which means that investors across TipRanks have been adding Apple to their portfolio. Click into the news as well. However, what I want to share with all of you, and I'm actually going to pop back on the screen for this one, is that as an investor, I don't want to look at stocks as tickers and numbers. That is one of the most dangerous things as an investor that I can do, is looking at a ticker and looking at a number and seeing that perhaps one week the stock has gone down by 10, by 20, by 30% and say, wow, it's a buy right now. It is one of the most dangerous mindsets that I can have as an investor. We should look at every opportunity that we have as the CFO or as the CEO of these businesses. Why? Because we are not just investing into ticker symbols and numbers, we are investing into companies. So I'm going to go ahead and share my screen once more with you all and show you through to our risk analysis tool here. It can be found on the left-hand side, risk analysis. And here we are with risk factors. Now, every single CEO, CFO, somebody who sits on the board, stakeholders of a company, they want to know all the risk factors that are involved before getting into an investment. The more information, the better. The more information that we have as investors, the more empowered we become. And so here we are with this tool, risk factors. We can take a look at exactly what those risk factors are when they come to Apple. We can see that 21% deals in legal and regulatory matters. We can go down this list, but just for the sake of our webinar here, I'm going to give legal and regulatory a click, and it breaks down further into, again, percentages of risk factors that we have when it comes to legal and regulatory matters. Specifically with Apple, we can even scroll down here and again, go through risk by risk, what exactly we are looking at, highlightable risks as well. Now, again, why is that important as investors? And I'm going to pop right back on the screen with all of you. It is because we are supposed to, as investors, be looking at our investments as if we are business owners, because that is exactly what is happening when we actually decide to make an investment into a business. I always run with how Warren Buffett phrased it. I think he phrased it best. We do not make an investment on a Tuesday and then sell out of that investment on a Wednesday. Warren Buffett, notorious, of course, as an investor. However, he always shares that he would never buy a plot of farmland 1 month to only sell it a few months later. He's going to invest in that farm, but before he even invests in that farm, he's going to study agriculture. He's going to walk around. He's going to walk the farm. He's going to understand as a farmer, what does it all entail? And that is exactly where risk factors are coming in. And so this would not be a TipRanks webinar without me sharing with each and every one of you that there will be an email coming your way as we speak. Now, I'm no Cupid here, but I will extend the Valentine's Day love for each and every one of you who have showed up to today's webinar. I'm looking forward to next week's webinar with hopefully some more positive economic news. However, with 2023 likely to be a very uncertain year with higher interest rates, higher levels of inflation that we're going to be dealing with that has just been stubbornly high, now is the time to invest as if you are the CFO of the companies you are investing in. Know the risk factors, paint the trends with each and every one of these companies, understand which firms are actually going to fare you far better than the others, and make sure you're always doing all of your due diligence. Thank you so much for joining me this Wednesday. I'm looking forward to seeing you all back next Wednesday as we jump into some more TipRanks tools, and of course, keep up to speed with our economic updates. Thank you so much, and I will see you all next week.